And good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Tuesday, January the 10th, 2023. The markets did continue initially during Globex and pretty much up to our opening, continued to move lower overnight and into the beginning of the U.S. session. And from what I can count here on the hourly chart, again, beginning here in the S&P, is that it's very likely that minor wave 2 is going to remain right in place. I'm feeling stronger that that is complete. And if so, then I also can count down thus far off of the highs that we saw on Monday, as I can count down 5 waves to the overnight low. And that low would have been registered at just before our opening. And that low was at 3891.75. And that would have marked minute wave 1 of minor wave 3, of intermediate wave 3. So going to keep our fingers crossed that this is going to remain the case, because the market again today just saw this influx of buy orders. And again, I just think it really reflects more of like what's kind of going on in the second week of the new year. And so we still got all this like new money coming in, and it's not necessarily new money, but money that maybe got taken out at the end of last year, now being put it back into the market, trying to determine where and how they're going to do this. So it gets placed into a lot of ETFs, and as we all know, and if you don't, doesn't take very much to really go figure this one out, that there are hundreds of ETFs available on just everything. And then there are ultra short ETFs, ultra long ETFs on, you name it, there's an ETF built around it. And those are all operated by asset managers. And those asset managers are then accepting all of the new money that's coming into the ETF and has to put it into work. So kind of that's what I'm thinking we're seeing, but it remains fairly firm. Now, how many more days? I don't know, but I'm not really feeling that it's going outside of the counts that we have. So in other words, I think we've come down in a minute wave 1, and actually, because I can count it, let me just open it up a little bit more so we can see it. Here would be minute 1, and then we have an A, B, 1, 2, 3, 4, 5, C wave. So it gets very, very interesting from here. Because if we're going to follow Elliott, if the Elliott is actually going to show us the path that the market is taking, then the next step would be for the market, S&P and the NASDAQ, to turn and hightail it lower. So what we saw begin should now continue. And again, start to drop, start to break below the 5 and the 8 and the 21 and the 55 and eventually the 200-day. Now, being if it was going to drop into a minute third wave, we're going to see some acceleration, or that would be the expectation, I should say, to announce that this is what is coming in. In other words, I believe it would sell, and as I often say, with a purpose. And that purpose is going to be like, we're going down. We're going down because of A, B, and C. And so pushing things in one direction seems to be over, and maybe here comes the other side. The other side is like, these are all the redemptions, and now they're coming in and they want to take their money out. I don't know, but I would be expecting the market to start breaking these high-level support, right? 39.42, which is pretty much right where it's closing. And then we have 39.32, 22.16, 38.91. And then we're heading for that, 38.85. That would break the minute wave 1. What we really want to see to give us some double, triple confirmation that minor 2 is done, any alternate counts that would conclude continued upside are invalidated, and that would be for the market to start coming down and breaking below 3,800, then below 37.75. And then we're going to get a pretty clean idea that we're in that third wave. The intermediate third, then the minor third, then the minute third. So if the count is correct up to this point, we're getting ready to enter into a 3 of a 3 of a 3. That would be the largest portion, and we should get a pretty steep drop out of it because of the direction. This isn't up, this is down. So I'm going to leave it as that. Upside, we should maybe get, if we get a little bit of throw over, well, we got 39.50 up there on the top. And that spot on a break there would begin to switch it up a little bit. I'm really not expecting it based on what I see. That doesn't mean it can't happen. So don't get me wrong. Now, what else was kind of like interesting today, and what I think people really need to hopefully work themselves around to realize that even though that it wasn't the easiest trade, or it was like surprising maybe to a lot of us, going like, why are we pushing this thing higher, so much higher again today? When we saw Apple get hit, we saw Microsoft start to come back down, we saw Tesla being hit, but yet they come, by the end of the day, they're buying it and scooping it back up and pushing it back higher again. And again, I'm not sure that this is a bullish statement or a bearish statement to see it go down, but I just feel that the market is in an area where the more bearish picture fits the reality of what I believe our economy, our country, and what these markets are confronting. Now, if they're doing this in preparation for starting to get ready for earnings season, which really begins at the end of the week with the banks, well, that I find a little bit, I don't know, it doesn't make sense to me, because I'm not really hearing that any of these initial companies are going to be reporting stellar earnings. They've all been talking about how we're going to be dropping into recession, that 2023 and possibly 2024 should not end up well for the equity markets, that interest rates are going to continue to move higher. That does not make the stock market happy when it costs more to borrow money. So again, when we're getting this contra move, and whomever is sitting there saying, well, I think you're all wrong and we're all going to go up, they're going to have to push really hard. And it doesn't mean that they're going to get anybody to follow them, but if they got the money to do it, then I think they will find the sellers, and then we'll see what happens after that. But in the meantime, again, I can't read into people's minds. I can't read into the future. I can go by what I see Elliott-wise. And the Elliott count right now is continuing to just show me that we're still in a downtrend, and that we still are likely going to be coming down again harder once we're done. Again, beginning stages can continue to be a little bit misleading in a way. You know, we've got all that strength, and we got all that strength that was off the employment situation. You know, the Fed's going to pivot, you know, blah, blah, blah. Whatever the narrative is out there being spun, if it gets caught up, and maybe has nothing to do with the narrative that's being spun, but everything to do with, well, this was our year-end play, we took the money out, and now we're putting the money back in, type of thing. And so we're reestablishing positions. And this is from 401ks and from IRAs that now are done for 2022, and these are new investments for 2023. That's kind of how I'm going to take it. So we go through this period often. And again, as I've explaining, that with most retail investors now not choosing individual stocks, but finding it much easier to participate at a broader base, so they just go into the ETFs. The ETFs work out so much easier because you can purchase much more of a broad base, depending on what the ETF is set up for. So again, we'll have to wait and see. But right now, I'm looking here in the S&P as a minute wave 1 and 2, likely complete. We might get a little bit more in this minute 2 to the upside. But even that, I can count 5 as a C wave. So I have an A and a B and a C. So I'm pretty satisfied with that. We'll see what happens tomorrow with the S&P. Or actually, once Globex opens, we'll see what happens from there. In the NASDAQ, it's pretty much exactly the same picture. Let me just open this up so we can see here. No changes. It still all looks good. We got the ABC, ABCX, ABC, minor 2, minute 1, minute 2. Same deal. We get the A, the B, and I got a 1, 2, 3, 4, 5. And maybe we got a little bit more. Maybe we'll get up to 11,299, 13,000. But out of this gig, I am really not expecting it to get up to 11,385 and above. This would be next resistance on the way up, but that's also just fitting for the bounce. And that's just not what I'm looking for. Even if I had to go back and run the retracements, for which are still there actually. The 50% retracement is 11,520. The 618 retracement is 11,738, et cetera, et cetera. Those would go with that continuation of the minor wave 2. Again, as I left it last night, I may eat my words and have to leave it again, but this to me is pretty much 5 waves. Got a 1, 2, 3, 4, 5. Okay, nice ABC. There's the little cell B portion. ABC 4, 5, minute 1. So those are all lining up, and I would be suspecting that the market is going to turn. But here again, we are dropping in a minute third of a minor third of an intermediate third. So it's a 3 of a 3 of a 3. There's no messing around. It begins and it goes. It goes. So hang on to your hats if it does, because we'll be looking for it to start to break down and break down quickly, pretty much like it did yesterday. But now it's got the added push of being in a third wave. Not one of a third wave, but it is 3 of a third wave. So it should go, if it's going to go. So tomorrow, we have no numbers coming out tomorrow. We don't have any economic numbers to speak of on Wednesday other than the EIA crude oil. For crude oil, they got the petroleum report, and that's about it. We do have Atlanta Fed business inflation expectations. That comes out at 10 a.m. Eastern, but I'm telling you, even on my service, it's black, which means nobody even looks at it. But who knows, because we're trying to get this insight and this look into what's really going on with inflation. What is the Fed really going to have to do? Because there's a lot of smoke and mirrors going in on the inflation front. And a lot of it's trying to get spun that, hey, we're all through this. Hey, blah, blah, blah. But then we continue to hear about, well, we're going to be moving into recession. And, officially they might declare that it's a recession, but I just don't see that because of the stimulus that's continuing to get pumped back out and put into the system. And it's coming right now via the infrastructure package that got passed. And now we're starting to see the enactment of that new package. And that's going to give jobs to quite a few people, a lot of people. And again, I want to say that I see interpreting that as a positive, but in terms of fighting inflation, in other words, if this package were to come and we were at the bottom of the cycle, and this would be like, wow, good way to stimulate the economy, good way to stimulate people, good way to get jobs back online. But it's coming at the top of that cycle after trillions upon trillions upon trillions of dollars in stimulus being pushed into our monetary system. And so it's just a weird position, which is presenting a weird picture. And it's difficult to try to put it all together to go, well, this is really what should be happening. But yeah, we've got this news, which tells us something different. And we got this going on, which tells us something different. And they're not meeting up. And that's remaining the case because we're at such high levels of debt, government debt. And then we got a change in our government. There's so much going on that I think it could just remain confusing. But eventually, I don't think it ends well. That's the other thing. That's one thing that the wave count on my larger time frames continues to tell me, that this does not end well. And while there's enough people out there that are telling me that I'm wrong, God bless them. I just don't think it ends well. We've got a lot, an awful lot of, this is the 2009 bottom. This is what stimulus money does. This is what extra large stimulus money does. And now we get up here, and all you need to do is you just need to do a little bit of investigation to realize there's $60 trillion bebopping around looking for a home. They're searching for alpha, as they say. And alpha, folks, is return, money, money. What am I getting? I want to put it because I need to earn money on my money. Now, that's presenting a problem because there's too much. And there's only so much that can really go in. And exactly how much do we think that these corporations are going to continue to be able to produce? If we are going to go into a recession, well, isn't that going to make money harder to come by? But so again, we need to look at whose hands is it in and who gets to keep it versus who needs it. So there's a lot of going on. And to be honest with you, because many, many people cannot afford to be invested in the markets, and maybe who's invested in the markets are the ones who are going to keep the money. And therefore, let's go. Let's keep going. Because they're going to have to be the ones that are going to have to go and support Apple and everything under the sun. So if that participation, the limited participation that we have in the equity markets or in the financial markets are the same ones that are going to support all these companies to get us through a recessionary period, God bless them. Then hey, we'll just keep following the price action. But right now, I don't necessarily see that. And I do see us turning again to the downside. And part of the reason is also, I'll tell you, against whatever all this is, this to me is 5 waves down. This is 3 up. We should get at least another 5 waves down, and that'll make an ABC, possibly. Then, sure, I can see a stronger upside. But I don't see it. We did 5 down. I'm not going to think that this is going to turn and just start moving up and up and up and up. So for tomorrow, again, no major numbers, no major input. So the market's going to be on its own. We may end up just in another inside day, just kind of farting around here because it's Thursday morning when we get to have the CPI number and jobless claims both at the same time. But there's people that have in their mind that the CPI, we're going to get the same reaction because it's showing that there's going to be this great improvement. And when you look at the consensus, which I did this morning, it is actually coming through that the consensus is there's going to be a great improvement over CPI. And I'm sure that's having an effect on why people are coming in early. So we'll see. That's going to be it for today. Our next update will be on Wednesday, January the 11th.